Okay, this is timing strategies for Monday, end of the quarter, June 30th. And happy 4th of July again to everyone. I'm going to make this quick because I'm putting out a client report and I got to type that up. And if you're interested in seeing that, send us an email. I'll shoot that out to you in an email form once I get that finished. So let's make this quick. Well, from where we left off, again, we spread. We were short 25% from that point. We were short 80. You can check all the video archives to see kind of how this has been mapped out. So we're still in the same position. I did a little bit of an allocation adjustment today. We are now long 10%, actually 20%, because we use a 2 beta. So, it's 20% on the S&P right here. As of today's close, 20% on the S&P, and we're also long 20%, which we were long 30% on the Dow. So what we did is we basically increased it from 20%. We've gone from 20% long Dow today, and we are now 20, and there's the diamonds is what we're showing you here. So we're 20% long here on the Dow from today, and we are 20% long on the S&P from here today. We are also long, actually we scaled down the financials in substitute for the indices. We are actually long, I believe it was 30% on the financials as of this day. I believe the 20th or the 23rd. I'd have to check my notes, but anyway, we're basically long. We were long 30%. We shifted over to the indices. So we're long 20% Dow, 20% S&P, 20% financials, basically using the RIDEX banking and financial sectors. And we're also long 15% the gold index as of that day right there. What are we short? We're short the NASDAQ 100 using the Qs as a proxy as of the same time frame back here, and we are short, actually, 22.5% the NASDAQ 100 as of this point again, and we are short 22.5% of the Russell 2000 from back in this range. Actually, we were short from from way up there. When we started to spread long the financials and the gold, we just shifted more of the short position over to the NASDAQ and to the Russell. And so far, that's worked out really well, because if you look at the Dow, well, first let's look at the Russell. The weakest of all the indices, the major indices today, being short 22.5% that, and you look at the Qs. That was also weaker, whereas if you look at the Dow, via the diamonds, basically worst case flat, and you look at the spiders, or the S&P via the spiders, basically up nothing, negligibly. So the spread on the short side is working. The financials, on the other hand, going to the XLF, isn't helping us any, but we've got the long in the GDX, which is more than offsetting the drawdown that we've basically traded in the financials. What I'm looking for here is starting tomorrow. It's got to start happening sooner or later. Hopefully it's already, sentiment is bad. We just haven't seen the volume to the downside. So what we're looking to do is drop that short leg on the spiders, on the Qs and on the Russell. Looking to drop that short leg and just get straight long for a pure straight long play back up to at least 1320 on the spiders. But the problem is we're looking at a serious bear market here, my friend. If you look at that, we're worst case scenario, if we get a B2 buy point, meaning if the market comes back down to our B2 level, which is about 1240 to 1220 on the S&P cash, or 124 to 122 on the spiders, somewhere in this area at B2, we will definitely drop the short leg in favor of a long leg, because that's been all year that's been our buy point for a very aggressive long. So the worst case scenario, our spread right now is basically making us a negligible amount of money. We're up about 0.5% since we put that spread on, but not much. We haven't lost anything on the way down. Certainly wish we had the full short boat of 80% all the way down here, but that's not how we manage things. We manage risk, and we let the market dictate how we're going to kind of maneuver the positions from there. Beyond that, it's anyone's guess. What I do want to point out here, though, last interesting little bit, why I think there's a low coming in yesterday or today, sometime here in the next day or two. It might have happened already today. Is I'm going to show you a picture of the Dow chart using some voodoo and some witchcraft and some technical analysis, which is pretty much what it all comes out to be. Let's just use the Dow here. Forget the fibs and all the other stuff if you're using fibs. I've got a time cycle. I got a half and a third cycle, basically a fib cycle, from the low of the 2006 July-August low to the low of the March 2007 low with the Chinese problem. Skipped a cycle low in there, but it actually worked out to be very close to the high. We only missed the high by about a week to be that. It was basically nailed the December high perfectly. It just missed the October high by just a little bit. We are also at that 164-day cycle today on the Dow, and then the low-to-low cycle again from the March low of 2007 to the August low of 2007 to the January low of 2008, and now we have a 108-day cycle, which is confirming, or actually confluencing very close. Give you a little more view here to that 164, 168-day cycle. So we have two static cycles basically coming in right in this area right now, where we're at right now. And if you look at the Dow, you know, trend lines are always subjective, but let's show you one of the interpretations I got of a trend line. We've got a downtrend channel being breached right here, but we're coming into some fibs and some time cycles where that breach is not accelerated yet, and that's a big yet. Could happen tomorrow, but before we get that, I'm looking for more of a bounce back up to retest that breakout low. We might even jam back above there, and everybody, that might even be this might be a very good buying signal, but for how long and how much, that's the question. Look at the trend line that we've got coming in all the way back from the 2004 lows, which basically is my interpretation of a trend line. Anybody can draw trend lines any way they want. This is how I kind of done mine. And I know mine are accurate more than most because, well, I give you more reasons than that, but if you're interested. But I know my trend lines are pretty accurate. We're coming right into that trend line and we're bouncing right now. Now let's look at the S&P cash. Kind of funny here. Our trend line from back here in July of 2006 to our lows of January and March of this year, we're also bouncing off right there as well. And the median regression line, or the median line from our downtrend channel, is also providing a little bit of support and confluence at the same time. And this works on the Dow as well. We got a fib cycle coming in from the March low, the low of the year, to the retest high of that channel that we came in, a 44-day run from the low to highs. We got a time cycle coming in right here. Does it mean anything? We'll see. If we get a move that takes us up at least 5% or takes out that high of the Fed day, which is going to be the test, what happens? If we can take out 1335 on a closing basis, then it'll be significant. We're at least going to probably get close to, you know, a bounce, hopefully tomorrow, take out or get close to the breakdown level that we had of about 1320. What happens, 1312 on the cash. What happens at 1312 to 1320? Right in that area between 1312 and 1335. It's going to be no man's land. If we get above 1335, we're going to look for a test of that channel up there or some other cycles that we've got coming in. But again, we're long, but we're spread short. So worst case scenario, if the market drops, we're basically spread neutral, so we won't see too much of the drop in the account. There won't be very little, if negligible, amounts of drop in the account value. If we get a bounce in anything, either the financials, the Dow, or the S&P, the gold index, we'll be doing pretty good on the upside if that comes, for the most part. Again, I'm going to be finishing our quarterly update. If you have any questions, give us a call, and hopefully this post. I wish you all the best of 4th of July, and have a good night.